quarter to see. It's going to be a reality check for the market. As far as banks, and if we take one step back and we look at the broader U.S. markets, we're going to see, in our opinion, we're going to see very selective stocks that will perform well, will deliver in their on their outlook and in their growth. However, the broader market will be weak. I was looking at Bloomberg chart from yesterday, saying that the consensus is expecting a contraction at 3.4 or 3.5%. I'm sorry if I got the number wrong, but something
3.8. But yes, exactly.
Something within that line. So the broader picture is not very rosy. But if you look at some individual stocks, such as, for example, we have JP Morgan to lead the way today with announcements. We like JP Morgan. We think they're going to deliver on their numbers, giving their size, their operation, their efficiencies. But for example, we don't like a slightly smaller bank. We think they might be under pressure from domestic demands and the yield curve as well.
Okay, so it's very stock specific. Yes, indeed. Great stuff. Thank you so much for joining us this morning. That's Maj Dola, who is the stocks portfolio manager at First Abu Dhabi Bank. So joining us live this morning.
And coming up in the next hour, Bloomberg Daybreak Europe, I'll be joined by Naira Chehich, and we'll be speaking to Karen Ward, Chief Market Strategist for EMEA at JP Morgan Asset Management. That's coming up here on Daybreak Europe. This is Bloomberg.
GEP Strategy.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
Oh, look who's home.
Long time no see.
You haven't changed a bit.
Come on in. Welcome back.
With genuine BMW expertise, parts, and a convenient range of options to suit you, when it comes to caring for your BMW, there's no place like home. Book your BMW service online 24/7. T's and C's apply, subject to availability, participating retailers only.
Now, let's take a look at you.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe for this Tuesday, October the 15th in London. Coming up this hour.
The IMF expected to cut its global growth forecast, building on trade uncertainty as China-US trade prospects fade, and there are fears of weak revenue in US bank results.
The United States sanctions senior Turkish officials and increases steel tariffs in response to the military operation in Syria.
Violent clashes erupt after Spain jails Catalan separatist leaders for their independence bid, and police in London ban Extinction Rebellion protesters after more than 1,000 arrests. I'm Leanne Gerrans with World News. And Boris Johnson's Brexit deal is hanging in the balance. EU chief negotiator Michel Barnier says a deal is difficult but still possible this week.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM Channel 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
And a very good morning from London. I'm Roger Hearing.
And I'm Naira Chahich. Good morning, everyone. It's coming up to 8:01 a.m. in London, 9:01 if you're listening in Paris, Frankfurt or Brussels. So similar themes to yesterday, Roger, in terms of US-China trade and Brexit, but a little bit of movement on both fronts.
Well, yes, in terms of the US-China trade, we're getting pushback from China. China saying this isn't a deal, they need more talks, and the market responding a bit to that, but a sense, I suppose, that perhaps no one really knows. And very much the same could be said of Brexit, because you've been hearing from Michel Barnier within the last hour, pushing back against those who are saying there can't be any deal this week, as indeed the Finnish Prime Minister, who's head of the EU Council at the moment, said. He said there wouldn't be time before the EU summit. Michel Barnier saying, no, it's still possible.
Yeah, and bank earnings is also something that we're really going to have our eye on today. We've got four of them reporting today: JP Morgan, Citigroup, Wells and Bank of America. And JP Morgan sort of leading the charge, Jamie Dimon. Lots of things to watch. I mean, it's still the story of low rates, meaning that net interest income is coming under pressure and revenue generally as well. So what are we going to hear on the cost-cutting front? We've been warned by some of them that trading isn't necessarily going to be the bright spot. So some expectations have been lowered on that. For example, Citigroup and Bank of America have lowered those expectations. But then you look to the US consumer as perhaps the one bright spot and the lending there. So those will really catch attention later today as well. Now, looking to the markets, 2 minutes into the equity market open.
Yes, it's really been a turnaround the last year or so when I think, we were talking about banks expecting a rising rate environment. The main thing was with no sighting of when the Fed is going to start raising rates again. Excuse me. The banks just have way less money to play with. There's a nice chart that our colleagues in the U.S. put together, estimating $13 billion in revenue that they thought was going to be there for 2019 is in fact not there. So Morgan Stanley and Goldman Sachs have the brunt of that. The main lever these CEOs can pull is cost cutting, because if they look ahead, this is the one lever they can't control. They can't control a Fed turning around, and they can't control, most importantly, geopolitical risks, which is what I think a lot of the market is looking at.
Now, you said Morgan Stanley there as distinguishing in one sense, but I mean, right across the board, I mean, we've got JP Morgan, Goldman Sachs, Citigroup, Wells Fargo. I mean, is there anything to distinguish in all these risks and difficult areas between those?
The more exposed to the consumer you are, the more questions there's going to be on the calls. I mean, our analysts have said that the Citigroup call will be watched the most closely. They've already started doing things like firing traders, and they're more exposed to the consumer than some of the big investment banks. And there's a lot of good news out there as well. It may not show up on the bottom line, but the consumer is still doing very well in the U.S. Unemployment is low. People are not defaulting on their loans, and people are refinancing their mortgages as well. So there's one upside of the low and rates going down. People are going to refinance. There's going to be some fees coming in, and so there'll be some jockeying for market share in that segment of the market.
Yeah, you said Citi's going to be closely watched, Keith. I mean, the way Bloomberg Intelligence's analyst Alison Williams put it is that costs relatively more critical for Citi. Wells Fargo may rebase targets, tweak strategy. Of course, Jamie Dimon's kicking it off with JP Morgan. She talks about market share opportunities there supporting JP Morgan, but for Goldman, it's more about trading and fees in the third quarter. Is that sort of what you're looking for as well?
Yeah, that's right. I mean, Wells Fargo is an interesting case because they are, their new CEO is just in the process of coming in. So I think they expect, we may not learn that much about them compared with next quarter. But Goldman, it'll be a trading story probably. The trading has been, third quarter is historically a little bit weak, but a year ago it was a nightmare. So there'll be a bit of a bounce back on that. Color from Goldman will be interesting on how the market felt after the WeWork fiasco, and they have a small investment in that they would have maybe be taking a write down. I mean, that won't move the markets, won't move the bottom line for them that much, but it will be something that will reflect on sentiment.
And Citi costs are a big issue for them.
Yes, absolutely. It's very big sprawling bank. There's a efficiency ratio that all the big banks target this, but especially Citigroup, it's crucial for them to be hitting that target.
Yeah, and for JP Morgan, I know we're sort of whipping through them here, but that's what's going to kick everything off. So obviously we've mentioned market share. Anything else to watch for?
Let's see, what else? The main thing is, like, these CEOs, they've been guiding the market of what to expect. I mean, Jamie Dimon has been straight up out there. The net interest income is going to be under pressure. Don't expect wonders from trading. You look at there's a bar chart here in our coverage. The trading revenue 18 versus 19. They're all the numbers are about the same. So a little bit stagnant.
All right, Keith, thanks very much indeed. Bloomberg's finance editor there, Keith Campbell, and still ahead on Bloomberg Daybreak Europe. WeWork leaning towards accepting a $5 billion rescue package. We'll talk WeWork next. This is Bloomberg.
This is a Bloomberg Market Minute. Stocks fluctuated in Monday trading as investors considered the implications of the partial trade deal that was reached last week and China's apparent reluctance to go along without further discussions. The price of oil retreated. The crude futures fell 2%. Mike Wilson of Morgan Stanley says it's all about soft demand.
The fact that oil is trading below where we were before the first attack on Saudi Arabian assets speaks volumes about demand. The reason why demand is weaker is because the global economy is soft.
The pace of the earnings reporting season is about to pick up. JP Morgan Chase, Citigroup, Wells Fargo, Johnson & Johnson, and United Airlines will post their quarterly results today. Netflix and Bank of America open their books tomorrow. Morgan Stanley Stanley on Thursday, American Express and Coca-Cola on Friday. Investors are anxious to see the government's monthly retail sales data that will be released tomorrow. Analysts think sales rose for a 7th straight month as consumers continued to support growth.